you so much for joining us. Terrific to see you again. Just as a first question, I'm really interested to understand what impact the pandemic has had on Klarna. Have you shifted strategy? I mean, I imagine that the shift to e-commerce has meant many more people using your product.
Yeah, and thank you for having me. It's great to be here. I mean, it was obviously a very different. It's been a couple of very different months. I think that first and foremost, before I kind of describe Klarna, I would just like to highlight that, like, I think it's always important when you talk about these topics to remember that, like, there's obviously been a lot of people that's been, very negatively impacted or even, died and so forth. So I think we always should remember those individuals. But I think with that said, taking that aside for a second, it was interesting. It was also challenging for me as a CEO, because obviously as you go into the situations, people go like, okay, what's this going to mean? And there was a lot of people asking us, also from investors and so forth, saying like, oh, you need to change strategy. Everything's going to be different now, and so forth. I think that for us, the beginning of it was really to stay steady course, to actually kind of deal with it and try to understand what will this mean, what's going to shift, what's going to be the impact, but be very steady. We saw some companies react very early, and I don't think that's always good in such a situation. You need to assess and understand and then decide whether you want to make any changes. But then what we started seeing, so initially we just saw that from a Klarna perspective, because we have all types of payments going on, right? So the first thing that we really started noticing was a massive growth in remittances, in trading platforms. So we do have some of those kind of where we support the payments infrastructure for such companies as well. And so we saw that was first taking off. And e-commerce was kind of, some things went really up. So you started seeing people hoarding. So pet supplies, groceries, they all went like, dramatically through the roof. And then obviously you started seeing very quickly, like, the few airlines that we have and ticket providers and so forth, they just, flattened out. So it was very big shifts and quite odd to watch this going on in real life and see how people reacted. But then what we've seen obviously is and fashion was kind of wavering for a while, kind of dropping a little bit, wavering a little bit, but then started actually taking off online. And then what we've seen is kind of fairly distinct trends. So the initial one was kind of the hoarding, getting groceries, getting toilet paper, getting pet supplies. Then there was kind of a trend where people were like, okay, now I'm home. What am I going to do? And so I want to still hang out with my friends. So they bought PlayStation, Nintendo Switch, home electronics, just, totally went through the roof. And we started seeing people buying such equipment at home. So that was a fairly intense period. And then it kind of shifted to the next phase, which was people were like, okay, I've been at home for a while. I've played a lot of games. I need to start moving. I can't just sit around, So training equipment, running shoes, all that started suddenly like just taking off. And then at the very end of it, I would say you started seeing, some luxury items, do it yourself, obviously at home. People started renovating their houses, buying, additional furniture, as well as actually, to some degree, kind of actually buying luxury items was starting to grow at a fast pace. And I think that one thing that now people start talking about, but that we actually saw fairly early on, and I shared with some people, was that, there's obviously been a set of people that have had a negative impact because they've been furloughed or they lost their jobs and so forth. And it's a very sad and tough experience for those individuals, but that is still a minority. A big majority of individuals still have their jobs for the same salary, but they've been on a massive savings exercise for 6 months. They haven't done, public transportation, they haven't been to restaurants, they've been traveling, and they have not shopped at all. Even though online has gone through the roof, it has in any ways not offset what they used to spend in physical stores. So overall, people's balance sheets for that people that haven't been furloughed, that have lost their jobs, are stronger than ever. People have much more money, and they've used that money for savings. So we've seen savings going through the roof, people paying down their debt, and they have spent it more online. So obviously, businesses with a strong online presence have benefited. And due to the fact that Klarna coincidentally happens to act in the online payment space, obviously to us it's been beneficial, and it has accelerated the growth rate of the company and that. And I think it's also by now fairly evident that while as things kind of open up again, you may see people go back and spend in stores to a higher degree and so forth. It's not going to go back to where it was before, right? So this is a mental shift. And I think even more importantly, actually, even more interesting, in some markets like Nordics as an example, we even saw that actually the biggest growth was among elder people, so who hadn't adopted e-commerce to the same degree as the younger generations had. But COVID really, was the kind of the thing that made them do it. And now as they start using it and get accustomed to it, and realized how packages works and all that kind of stuff, like they're not going back either, right? So it's across the board. So quite interesting.
Yeah, I mean, you mentioned furloughing and people losing their jobs. Obviously, there are many people who are still in work, and as you say, they've been saving a lot of money. But we're going to see, I think, a souring of the global economy maybe over the next 6 months. How do you think that might impact you, or how much do you think it's going to impact generally the kind of like the lending space? Do you think we're going to start seeing quite a lot of people defaulting, or how do you think about that situation looking forward over the next 6 months, a year?
I think it's one where you ought to be cautious, right? And I think Klarna has tried to be cautious. We because we're a bank and we report quarterly to the Swedish financial authorities. It's also been written about how we have reserved more money for potential losses coming up and so forth. So we have been cautious in regards to this. At the same point of time, Klarna's business is quite different because we offer only people very short-term installments. It's primarily a couple 1 or 2 months or maybe 6 months at most. So it's very kind of shorter term. The amounts are very low, and usually there's no interest for the consumer, right? There's no interest in fees in a lot of these products that we offer. So as a consequence, quite a different. If I would be kind of offering people £10,000 loans and what we call blanco loans in many countries, or even in mortgage space and so forth, I would be probably slightly more cautious and slightly more worried. For Klarna, it's slightly different. But still, you got to be cautious, and you also got to be mindful, right? You got to be mindful about the fact that you want to make sure that you understand your customer base, that you give them. And so we definitely took some precautionary actions to make sure that, like, are we underwriting correctly? Are we giving people, the spending power that they should have, considering a different outlook in the economy? And I think that's a responsible way to deal with it. So we're still cautious, and I agree with you. I do expect the economy to continue seeing that. I think it's just been such a macro shock to the system, and it's been so hard to predict exactly. Like, I'm still surprised when I talk to entrepreneurs and so forth. I'll talk to an entrepreneur, I'll expect that their company's done really bad. It would be exact opposite, and then you expect somebody who shouldn't be affected at all, and they've had a very material negative impact. And it's just, I think that uncertainty and unclarity is partially why the stock markets have been crazy up and down and all that, because it's very hard to fully understand, like, what is the effects of this and where are the impacts, right?
Sure, I think we're just going to see over the next 6 months that it's very hard to predict how various verticals are going to perform and various industries are going to perform. Clearly, there
Yep.
are going to be winners, and clearly there's going to be some industries that are in distress. So, just looking more broadly at the European ecosystem, if you don't mind, the fintech ecosystem, you guys have raised $650 million recently, a valuation of 11 billion. You're Europe's highest valued privately owned fintech. We've seen other European fintech companies here in the US, Monzo and Revolut, and in Germany, number 26, facing kind of quite serious challenges over the past few months and years. How have you at Klarna managed to avoid some of the pitfalls of scaling in the way that you have?
Yeah. So when you say that, it just sounds like, am I really? Are we? It's crazy. It just feels so
From the
unrealistic.
outside, it feels like
Are we
that.
really the big? Like, I can't compute that. But look, I think that yeah. First, again, I do want to make sure that, like, some of these neobanks built a lot of their business around a very promising offering that had the primary target audience was people who travel a lot, and where the bank's traditional offerings did not necessarily wasn't good for those people, because the FX were terrible and people were being, sorry to say so, ripped off by the traditional banks in regards to traveling and these things. And I must say that to some degree, I feel sad on behalf of these companies, that because it's just unluck, right? It's just unluck that this COVID thing, from their perspective, just unluck. There's nothing wrong with these businesses. They had a very good idea, a very good direction, and so forth. And then they being as other people are being, as restaurants and other people also unlucky as a consequence of this. So I think you should be careful to draw too much conclusions from that, from kind of saying, was Klarna smarter or better? I don't think, partially this is just we happen to be digital payments primarily, and then we had developed a neo-banking offering on top of that, which is slightly different. It isn't as much about travel. There's also a lot of travel benefits because we have also much more attractive FX rates to our card offering than, the traditional banks and so forth, but it hasn't been as dependent on that aspect of the business. But then obviously, to your point, I do think that one of the things that I'm proud about and that I do think benefits us is that I've always, when we kind of set our latest big hairy goal and big vision for Klarna, when we did our classical SWOT, right, and your strengths, weaknesses, and opportunities and threats and so forth, I do think that on the strength side, we did say, look, we do have a nice benefit that we've been around for 15 years. We have been the bank regulated for multiple years. We didn't get any special, startup license bank. We got a proper normal standard bank license. We have built up independent risk controls, compliance, new product approval processes, all the things that banks live with. So we have experience, and we've found a way in our operating model to incorporate those elements that the regulators have as a requirement of us, and that I think are very fair, because at the same point of time we have the ability to raise deposits that are insured by the government. And so the government is they're putting requirements on us, but also giving us something in return for it, right? And so it's very fair, and I think that's a strength that we've had the time to figure out. How are you a bank? How do you make sure that you follow all those regulations, that you have a sustainable business model? I mean, we've been a profitable company up until a year ago. We had a sustainable business model. We've done all of these things, and at the same point of time, we've also been forced to reinvent ourselves. How do we make sure we're still a fintech, fast-moving, agile, able to launch a lot of new products and services at a fast pace and so forth? And I actually think it took some time. I tell you, it took some time. We spent a lot of time internally. We have invested a lot of time figuring that out. Like, how do you do that? It's one thing, I think, to build a tech company that moves fast, and you can say like rather test it and break it, and just and so forth. There's a lot of these sayings that tech companies have, and you're like, yeah, that's okay. But if you're a bank, and your whole business is about reputation, and you have regulators and all that, like, how do you do it then, right? So it's taken some time. I think that I believe now that that's actually one of our biggest strengths, that we're both a fintech and we're a bank, and we have that balance. We found that balance between those two.
Sure.
But it's taken us some time to get there.
Yeah, well, I'm interested to get your thoughts on the US market, because obviously that's where you're growing incredibly quickly at the moment. Clearly, there are incumbent players like PayPal and Amazon, those kinds of companies. How do you think about the challenges of the US market?
Well, I think that, like, look, in regards to, I kind of think, in my world, what's happening right now is, it's a little bit like self-driving cars. We used to speak a lot about it 3 years ago, and I'm still like, where are they? Where are they? I'm still just debating with my
Get
now
back.
7-year-old daughter, like, is she gonna drive a car or not? I'm not entirely sure. Like, I think probably not, but I'm not sure, right? So, like, I think when it comes to the disruption of retail banking, based on what I've seen in the last 15 years, based on open banking, based on the regulatory pressure, based on the preference of the consumer base and the growth of millennials and the digital native users we have, I think it is now. I think genuinely it is happening right now. I used to watch e-commerce for the last 15 years. I now speak to very major, large US retailers who say, because of COVID, as a consequence, when they come out of COVID, they expect more than 50% of their business to be digital. That is a major shift. These companies that tended to only care about what happens in store and how they think about in store, they're now more than 50% online, right? So, but it took us 20 years. We talked about that 99, 2000, right? Remember, like, they were all there, and like, it takes a little bit of time, but I really, if I compare what happened to physical stores and retail, and then I look at what's going on in retail banking, I'm like, that's now. It's right now that it's happening. And I think as a consequence of that, I think, as always, when you go through these disruptions, there three things happen, right? So you're gonna have the new entries, fintechs, Klarna, others, whether it's a Revolut or a Chime or whatever it might be. They're gonna come in. You're going to have some banks that actually, which is very difficult, you're going to get an amazing CEO in some of these banks who is actually going to take that fight internally, who's going to actually transform those businesses. And then thirdly, you are going to see some M&A. you're going to see some banks that simply try, buy themselves into being something different than they are today. That's usually what happens. And then some will go bust eventually, right? But it'll take time. It will take time. So that's kind of the natural evolution. And what I do think is a major shift, though, is that historically we've seen local banks with very big product offerings. So they do corporate banking, retail banking to merchants, to consumers, and so forth. That's going to change. You're going to have global providers that are more niche. The different things with niche in retail banking is that credit card industry is $1 trillion industry. So niche, I don't know, like it depends how you define niche, right? But the point is that like Klarna is not going to do trading. I'm not doing Bitcoin trading. Other people doing that much better than I. Like, we're not going to do that. We're not going to do trading platforms. We're not going to allow people to buy stock. I think other apps are much better for that. So like, what we want to do at Klarna is we want to help you with everyday purchases, everyday transactions, your everyday finances. These are the things that we're passionate about. And so I think that there will be kind of different verticals. The verticals will look very different, but people will operate in a global environment, as Klarna is doing. And so I think that's the big shift that you're seeing. And then I'm not too nervous about PayPal. Like, when we were in the Nordics, people were like, oh, we're in the Nordic phenomena, it's not going to work there. Then we came to Germany. We're much larger in number of users than PayPal is in Germany. Now in the UK, we're seeing higher share of checkout for Klarna than PayPal. After only 2-3 years in the market, they've been there for 15 years. I feel I know like how to compete with that company. I don't feel too nervous about it. But who knows? I don't want to be, I want to be humble about it as well. You just gotta continue innovate, continue put new products there, try to make sure that there is a long list of 200 features that really matters to people, so that once they try Klarna and compare it to something like PayPal, they say, I'm never going to ever go back, right? That's the thing you got to keep on kind of trying to innovate around and make sure you're creating that customer value.
Just being relentlessly focused on the product, I guess. We're pretty much out of time, Sebastian, but just one final question, if I may, really, and it's about leadership, right? We've been through a really extraordinary period over the last few months. I'm just interested to just, get a sense from you what you've learned and what you think the characteristics of successful leaders are going to be moving forward.
Yeah, I'm not sure it has changed, but I do think if one thing that I did feel during this, and here I've done this for 15 years now, but I'm still only 39, so I do have some years left in my career. But I'm going to feel a little bit like the old guy, because I do think that during the crisis, at least, I do think a firm hand is quite important. I think it's not getting too nervous and just saying, look, let's analyze the situation, let's stay calm, and really kind of take some time to evaluate what makes sense, what do we need potentially to change. I did see some companies act too fast, in my opinion, and I think that's just hurtful. So I think you gotta, I think that's been an important thing. And then I think, other than that, I think things stay constant. I think the relentless focus on your customer and creating customer value, and then trying to create an organization that feels that at heart and that is operating in that way and continuously innovating and with that as a target, I think that's fairly consistent. That will stay consistent.
So some things shift, some things stay the same, right? Sebastian, thank you so much for joining us today. I hope you get your autonomous vehicle. Maybe one day you might even get a jetpack. We'll keep our fingers crossed.
Yeah, that'd be cool.
Always great to speak to you, and thank you so much for joining us today at Ride Smarter. And speak to you soon.
Thank you so much.